Welcome everyone to the Vested Interest channel. This is Shane, and it is that time of month again. We are turning the calendar again. October is over, on to November we go. Where did 2025 go? Been blowing through this year, it seems like. In this video, we're going to take a look at the 3 stocks I am looking to buy in the month of November. We're going to look at Owens Corning, Vici, and one that's been here for a few months, Comcast. Still is down well below my cost basis, and I still see some value there, so we're going to continue to add to that. Let's get into the video. Vici Properties, this one is, well, we've been adding to it a little bit actually over the last couple of weeks, but a new one for a focus for this month. And it's really going to depend on where the value or where the dollar amount is from week to week on this one. If it goes up above $32, $33, I'll probably back off. But if it's below 32, 31, definitely under 30, I am going to be buying Vici Properties and might be buying this one pretty heavily. You can see here, as of the close of business on Friday the 31st, there, happy Halloween. I guess we're a day past Halloween by the time you guys get to see this. I am recording this on Halloween evening. But they're closed out the week at $29.99. Looks like they were up a little bit in the after hours, at least whenever I pulled this. So depending on where they close out, they may be more or higher or lower than that value there. But as you can see here, 52-week range as low as $27.98, as high as $34.03. So they are right up against their 52-week low right now. Part of the reason that we are going to be focusing on this one. Love this one to pull back a little bit more, get down into that $28, $27 range. But again, under 31, I am comfortable adding to this position. Price to earnings ratio, $11.40. Forward P, $10.64. Really, for companies like Vici, which is a REIT out of the real estate sector, you want to look at funds from operations. So you can go into stockanalysis.com where I pulled all this information, and you can go and look at their FFO and check that out as well. But we're going to run through the rest of this anyway. It does have a market cap of $31.98 billion, revenue of $3.97 billion, shares outstanding 1.07 billion, dividend $1.80. They are a quarterly payer. Very nice starting dividend yield, 6% currently. Ex-dividend date September 18th, so we're well past that. They've already paid out their dividend, I believe. They did just have an earnings date. You might want to look at that, October 30th. Now the beta is 0.71, so they are less volatile than the overall market. And currently, price target of $36 would represent a potential 20.04% upside, and analysts do call it a potential buy right now. Now let's look at some of the metrics that I like to look at here. Revenue, you can see up and to the right, going back to 2020 here, definitely up and to the right, currently $3.97 billion. Profit margin has stayed relatively flat, but look at that, 70.18% profit margin on this one. Very nice to see. Obviously, we'd like to see that steadily growing, but man, if you get above a 20-30% profit margin, that is really good returns. EBITDA, it stands for earnings before interest, tax, and depreciation and amortization. Now, this is really the number before all the funny business happens with earnings, right? Before they take out all of the numbers that they want to take out and maybe make them look a little bit better. And you can see that up and to the right. Since 2020, they have been steadily growing their earnings, $3.67 billion. Total assets, same thing from 2020. You can see that steady up and to the right, currently at $46.54 billion. Now, I like to compare their assets to their liabilities, and I want maybe a 2-to-1 ratio or better. As you can see, $46.54 billion current total assets, total liabilities, even though it has been rising, is still only at $18.44 billion and well below that 2-to-1 margin that I like to see. Now you can see they do have some debt, $17.68 billion, but they are holding some cash on hand as well, cash and cash equivalents. It fluctuates a little bit, which is pretty common, but currently have $507.50 million. And you can also see their shares outstanding here have been steadily increasing over time, right? You can see that they are diluting you as a shareholder, but that is very typical of REITs and real estate companies. So if you don't like share dilution, which typically I do not, I don't mind it for REITs, but it has been pretty steady over the last several years. 2023, 2024, looks like the trailing 12 months, $1.068 billion, which has been pretty steady for the last several years. So I do like to see that it's steady. I would like to see it start to decrease, but that's really the only negative I can say on this one. That is Vici Properties. Again, if it stays under 30 or dips back below 30, this one will be one that I will be heavily buying for the month of November. Owens Corning is number 2 on our list, ticker OC. This is an industrial company out of the industrial sector. They sell a lot of construction goods, shingles, insulation, that sort of thing. Now, they closed out the week at $127.31. Didn't look like they were moved at all in the after hours. Maybe they don't trade in the after hours. I don't know for sure. But they do have a 52-week range as low as $123.02, as high as $214.53. Another one that is very close to its 52-week low. Not quite as close as we saw with Vici there, but pretty close nonetheless. Does have a price to earnings ratio of $33.10 per share. Forward PE lower than that at 9.64, so very low forward PE. Earnings per share $3.84. Market cap of $10.65 billion. They do have a dividend of $2.76 per share over the year. They are a quarterly payer with a nice starting dividend yield, 2.17%. This one actually is growing their dividend by double digits as well. Really like that. Ex-dividend date was October 20th. They're going to pay out, I believe, did they pay out sometime in November, or did they already pay out? Maybe they already paid out. I'd have to go back and look. But anyways, they do price target of $178.31, which they see potential for 40.06% upside. Analysts do call this one a buy. This one is more volatile than the overall market, though, so keep an eye on that. $1.32 with a earnings date coming up November 5th. So if you're interested in that, next week you can check out their earnings, see what's going on there. Now let's look at some of the metrics that I like to look at here. Again, revenue up and to the right, going back to 2020 here, currently at $11.74 billion. So like to see that revenue growing like that. Profit margins on this one, though, have gone down a little bit, especially over the last several years in the trailing 12 months specifically, down to 2.84%. We would like to see that increase, right? We'd at least like to be back over this 10%. That is not a very good profit margin, I will just be completely honest. Now, their earnings before interest, tax, and depreciation and amortization, again, up and to the right there. 2020, 2021, 2023 leveled out, maybe dropped a little bit in 2023, but right back 2024 looks like the same thing, trailing 12 months, currently at $2.61 billion. Total assets growing as well, which makes sense. $14.48 billion. Again, I like to compare that to their liabilities. Now, liabilities have been growing as well, and we're not quite to that 2-to-1 ratio that I'd like to see. I'd like to see them pay down some debt and pay off some of these liabilities. 9.268, but we still have plenty of assets to cover liabilities. If they had to sell some things to do that, they could make that happen. Total debt, they do have some debt, $5.98 billion here. They do hold some cash, though, $230 million. I would actually like to see them get this cash up a little bit. They were above $1.5 billion here back in 2023. I'd like to see them get that up a little bit, but again, still holding $230 million. And this is what I do like to see with shares outstanding coming down. They are pulling shares out of the market. You are more of a shareholder every year as they decrease this share count. Nice, steadily decreasing over time. Owens Corning, that is number 2 on the list. This one I will probably be a little more selective. Needs to be under about 130. There is where I'm comfortable buying this one. I'm not going to be adding a ton of shares, maybe 1 or 2 here and there over the month of November. Last, but certainly not least, and definitely not the only ones, but these are the 3 I will be focused on the most. And again, this one I have been focused on for the last several months. Comcast Corporation, ticker CMCSA, and I feel like this one just keeps on dropping. $30, $28, $27 now. Closed out the week at $27.84. Looks like it was actually after hours down a little bit more, 27.77. 52-week range as low as $25.75, as high as $45.31. So definitely right up against their 52-week low, though they could drop a couple dollars more even and still be above that 52-week low. PE ratio 4.63, $4.63 per share. Very, very low, extremely low, ridiculously low. I mean, just absolutely low. Forward PE a little higher at $6.71 per share. Market cap of $102.77 billion. Revenue of $123.31 billion. Dividend is $1.32. They are quarterly payers, so divide that by 4. Nice starting dividend yield on this one as well, 4.74%. Their ex-dividend date was October 31st. I'm pretty sure they already paid out. If not, they probably pay out this month. Their 52-week range we already went over. Beta of 0.83. Analysts do call this one a buy. Price target of not 300. That would be crazy. Price target of $39.66, which does represent a potential 42.48% upside. Very, very undervalued, in my opinion, at least this one Comcast is. Earnings date October 30th, so you can check that out if you're interested. Maybe there was something around the earnings that was reported that had this one dropping. All right, let's look at those numbers again. Revenue up and to the right, though it has flattened off the last couple of years. You can see nice growth 2021, 2020, 2021, 2022, 2023 flat, 2023 growth. Looks like flat in the trailing 12 months, though some of that will be part of 2024 numbers since we're just in November. Now their margins are expanding. Going back to 2020, you can see they were around 10%, currently at 18.33%. So that their margins are expanding over time, which is what we want to see. EBITDA, earnings before interest, taxes, depreciation, and amortization is up and to the right as well, right? It should be growing right along with their revenue, and you are seeing their earnings is doing the same thing. Total assets, pretty well flat here at $273 billion. Again, I like to compare to their total liabilities, $175.36 billion. So again, not quite to that 2-to-1 I'd like to see, but definitely far more assets than liabilities, and they could pay off or sell off some of these assets to pay off liabilities if they absolutely had to. Debt, you can see, is coming down. I do like to see that. So even though it is a lot of debt, $99 billion, it is coming down, right? See that? Cash and cash equivalents, it goes up and down like most companies do. Now they do have a healthy cash on hand balance, $9.33 billion. So they've got some cash on hand. And here again, shares outstanding. I do like to see the decreasing shares outstanding. Again, you are more of a shareholder as they pull shares out of the market. That is what we want to see. And typically companies that I invest in do that. But again, REITs and real estate, something like that, like Vici Properties, I can understand they issue shares. That's part of their whole program. And they also pay out higher dividends, 90%. But this one is not that way. They are pulling shares out of the market. That is Comcast. Number 3. And this one here, I have been buying heavily under $32 per share. So obviously if it's under 28, 26, right in there, 27, anywhere in there, I'm going to be buying pretty heavily on this one as well. Probably be the heaviest buyer of Vici and Comcast out of the 3. Owens Corning, I'd like to add a little bit. And there are several others I'd like to talk about as well. Pfizer, I still feel like is undervalued. Genuine Parts Company, Badger Meter, that one's one I'm very seriously considering adding to the portfolio. Verizon, American Water, that is another one I'd love to add back into the portfolio. If it got down 125 or lower, 120 and lower, definitely I'd like to add some there. General Mills, Zoetis, if I wasn't so heavy on pharmaceuticals, on healthcare, I might look to add Zoetis. Chevron, Procter & Gamble, this is one I will be nibbling on as well. If it stays, around that one, I think it's 150 range and under, I'd like to add there. Occidental is another one I'd like to add some more to. It's under my cost basis, so probably will be. Valet has run up around my cost basis, maybe a little over, so I backed off buying that one, but it's because I have a very sizable position. If you are looking for a company out of the material sector, specifically a mining company, now it's a Brazilian mining company, so there are tax implications there. This is one I still feel like is undervalued, even though I'm not looking to really add there. Chubb, Verizon is one. If it's under $40 per share, I'd like to add in the 30s there. Even if it's in the high 30s, that's one I'd like to nibble on as well. Lots of companies out there are undervalued. Drop in the comment section down below. What companies do you think are undervalued currently outside of the list that I have and the 3 that I'm looking to buy in November? All right, well, that is really it for this one. Let me know what you are looking to buy in the month of November. As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up. Ring the notification bell. Most importantly, subscribe to the channel. Join us on this journey to financial freedom. Join the vested interest community. Drop a comment down below. Let me know what you're buying for the month of November. Let me know what you think of the 3 that I am looking to focus on. Comcast, Vici, and Owens Corning. I do personally read and respond to the comments. I am always interested to read your questions, opinions, or suggestions for future topics. Waste management is another one, and waste connections. Those are 2 other ones that I didn't have on that list, but I think that look pretty close to, if not fairly undervalued right now. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by. Thanks for tuning in. Hope you have a great weekend, and we will see you in the next one. I'm not a financial advisor. Nothing's presentation. You should be considered financial advice. I'm only sharing my opinion. Invest in educational and entertainment purposes. If investing involves risk, you can't lose money. So never invest any amount you're not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and select criteria. Or see the advice counselor, a certified financial advisor.